Gentlemen, good morning to all of you. Sir, since you are here, I will not go in detailed presentation, but I would like to highlight 10 important point takeaway, and these takeaway we are picking up from changes effective from 1st of February 2019. These changes are being done by GST Amendment Act 2018. But out of these 10 factors, there are certain things which we need to look back and check whether we have to really do more amendment, more correction. Those points I'm going to highlight today. The first and foremost, sir, the term supply. We all know taxable event in GST is the supply. Sir, we have seen the fate of term manufacture in central excise provision. Even the term manufacture, which is defined under Section 2, subsection F, Central Excise Act 1944, is not settled as yet. The term supply, which is taxable even in GST, is going to create the same fate for the simple reason the way term supply is being defined in GST law. How the term supply is being defined? Supply includes, without defining what is supply, so subjective term, and then inclusive definition, all forms of supply of goods or services or both, and then 8 exemplary term included in supply definition: sell, transfer, barter, exchange, licensing, leasing, renting, disposal. But irony is, those exemplary terms are not defined in GST law. So my foremost request which we are putting forth, that taxable event in GST is supply, but the way term supply is being defined, it is going into the same way as we have seen the term manufacture since 1944. Maybe we can look into. But otherwise, the laudable things which is being done in GST Amendment Act, Schedule 2, which is determining a supply can either be supply of goods or supply of services, is delinked from the supply definition. Importantly, 3 transaction, merchant trading, high sea sale, inbound sales are taken into Schedule 3 item, which is no supply, laudable one. These are the changes. But term supply really required to be looked into, the first and foremost. Second item, sir. Second item is Section 9, subsection 4, reverse charge. Now, from 1st of February 2019, the earlier notification, 8/2017, got rescinded. And this 9, subsection 4 is going to be applicable only when specified taxpayers or specified goods or services are going to be notified. Our chamber is making a point that 9 subsection 4 should be done away completely. It may be applicable for specified class as in when government going to notify, but 9 subsection 4 is not helping because of number of reasons. Operational inconvenience. At the month end, we have to raise the invoice, self-invoice, identify HSN code, SSC code, and it is not helping trade in terms of ease of business. And secondly, maybe we end up paying taxes over and above MRP. It may be argued credit is available, but what happened for the exempted sector? They will pay over and above MRP and credit is not available. Second. Third, composition dealer. So for composition dealer, limit is increased from 1 crore to 1.5 crore. Laudable one. And you know one provision also inserted by GST Amendment Act, that now composition dealer can also provide services to the tune of 10% of turnover or 5 lakh, whichever is higher. Now, new one announcement made by GST Council that even this composition would be open for the service sector. And limit is being stated 50 lakh rupees with a GST rate of 6%. Now, this question is very technical because GST Council has said it is going to be applicable from 1st April 2019. But if you go back to Section 10 in CGST Act, there is no provision of 50 lakh for service sector. So we have to amend the GST Act to incorporate this provision. And this is from 1st April 2019, and both the houses, Lok Sabha and Rajya Sabha, off till the time new government coming in. So what happened? How it is going to be implemented from 1st April 2019? Though it is being announced by GST Council, applicable from 1st April 2019, first and foremost. And one more point for composition dealer, sir. Composition dealer is not getting the, mileage in the market for simple reason. They are not allowed interstate outward supply. That is a practical problem. So even though it is open for the service sector, and he can't do interstate outward supply, is it really going to benefit the service sector? And even for the goods, I'm a trader in Delhi, taken composition, I can't do interstate to Gurgaon. If I do, composition is not available to me. Can you think of such situation in NCR region? So that's the reason composition is not being picked up by the trader. Item number 4. Sir, in GST, we got concept of seamless flow of credit. There should not be cascading of taxes. Whatever taxes I pay on my inward should be available as a credit. But still negative list exists. And what negative list contain? I'm getting construction of this factory. And this factory I'm going to use for the manufacturing of goods. For construction of factory, the contractor is going to charge GST. Credit is not available to me. Even for the office constructed, and I'm going to use office for the provision of my outward supply, credit is not available. What happened for sales promotion? We are giving 1+1 combo. We are giving some article as, you can say, sample. Personal consumption, gift, these are credit is not available, and these are creating cascading in the system. And just imagine a situation, simple reason, sir, without factory, can we undertake manufacturing? Without office, can I undertake provision of services? And credit is, that is not helping Make in India. Item number 4. Item number 5, sir, Section 22, registration. We all know that GST Council has recently announced, and our past president has also referred, that limit increase from 20 lakh to 40 lakh for goods, applicable from 1st of April 2019. But again, the same point I would like to draw, in the Section 22, there is a specific word written 20 lakh. Meaning thereby, you have to amend the GST Act to incorporate 40 lakh rupees. So what happened? How you can amend the CGST Act unless you brought Amendment Act? And this is not possible because both the houses off and expected only after the new government is getting elected. 1st April 2019 deadline. How we are going to meet? That is the next question which I am raising in terms of Section 22 for 40 lakh rupees announced for the goods, not for services. Coming to the 6th item, sir. Now it is being stated that we can issue consolidated credit note and debit note against multiple invoices, which was not possible. Now it is effective from 1st of February 2019. But problem is, we are not finding this utility enabled, the field enabled in GSTR1 for raising consolidated credit note or debit note against multiple invoices. The first point. And second point, are we looking for these changes effective with the new return coming in, which is expected to be only by April 2019 or July 2019? But what happened? This provision applicable now, we need corresponding changes in GSTR1 to accommodate that we can issue consolidated credit note and debit note against multiple invoices. And one technical point said therein. We have made the changes in Section 34, But we have not made corresponding changes in section 15, subsection 3, post-supply discount, incentive. And therein the provision exists, I can issue a credit note, and credit note must be linked with the individual invoices. Still provision exists. So going contrary to section 34. Item number 7. Sir, 43A, which is the new return we are referring to. And this new return, as stated by GST Council, would be given on public domain from 1st of April 2019, and there will be 3-month pilot project and effective from 1st July 2019. What, as a chamber, we are requesting government that this utility should be made available for minimum 6 months as a pilot project. Should be available to all of us together for the training purpose. And even you can take some good corporate on some test basis, sample basis, and let them work on this particular return, new return which we are referring to. And then once we are successful in our pilot project, then only this new return system should come in. And maybe from 1st October 2019. And why we are saying so? For simple reason, we have seen the fate of GSTR1, auto-populated 2A, 2, 1A and 3. 2 and 3 is being done away with. So we do not want to have same kind of fate as we have seen in the beginning. Now, if we are coming with a new return process, this new return process should come with a full-fledged, successful testing and then implemented. So maybe from 1st October 2019. Now I'm going to place 3 important provisions which is going little contrary to the trade industry and commerce. And these are very technical and critical, and which I'm raising before you. Section 49A got introduced, sir. And Section 49A talks about if you are having credit of what? IGST, CGST, SGST, UTGST, compensation cess. Am I right? 49A referring that we have to first exhaust IGST credit. We have to exhaust IGST credit before utilizing CGST and SGST. So meaning thereby, and why it is being done? For simple reason it is being done that the settlement between center and state should not be keep pending. That is the reason in the mind. But this is going to create a problem. And how it is going to create a problem? One slide I would like to show to all the participants here. So this particular slide will explain how 49A going to create additional working capital blockage, though you are having credit in your hand. Before it is opening, one more connected point, sir. We are having 3 ledger, e-cash ledger, e-credit ledger, and e-liability ledger. First and foremost, now these ledgers are given in a bucket, IGST, CGST, SGST, UTGST. For e-cash ledger, why we are keeping bucket? And number of time we have seen that we have IGST liability, but we have paid in CGST cash ledger. And this can't be cross-utilized, creating a problem. For e-cash ledger, we should have only simple one bucket. And this bucket should be available to me to utilize for any liability, be it IGST, CGST, SGST, UTGST. But keeping bucket in e-cash ledger is creating a problem. If by mistake, and it has happened, one of my client was supposed to pay 5 crore rupees IGST liability, but wrongly he has paid in CGST e-cash ledger. Now he can't utilize CGST e-cash ledger for IGST liability. So what happened? He has to go for a refund of 5 crore and pay again 5 crore. So why can't we have one common bucket? Now coming to the 49A, the provision which I was referring to. Look at this slide, sir. This is very interesting, which I have created to explain the provision. Maybe you can also have a look. So look at this slide. This will explain 49A. I have created pre versus post. Post 1st February 2019, and be ready. This is the additional working capital blockage. Look at the pre part first and go with me. Don't read any line till the time I'm inviting you. Go with me. See, look at the pre-amendment table. You got input tax credit of CGST 10,000, SGST 10,000, and you got 1 lakh rupees in IGST credit account. And you got liability of IGST 95,000, CGST 13,000, SGST 13,000. So pre-amendment, you are going to use IGST credit of 1 lakh for payment of 95,000. Am I right? So 5,000 left in IGST credit account. You got your CGST liability 13,000. So what you will do, you will use CGST credit 10,000 in that order, CGST and IGST, and you will use 3,000 from IGST credit. It's still 2,000 left in IGST credit account. Go to SGST. You're going to use first SGST credit 10,000 and then balance 2,000 which was in IGST credit is being utilized. So what happened? 1,000 rupees you will pay in cash in SGST account. This is the order. Pre. Now look at the post, which I have made red, and I will explain what is this red all about. With the same example, with the same fact, now look at the transaction. You got 1 lakh rupees IGST credit and you got liability of 95,000 IGST. You're going to use IGST credit for IGST liability, 95,000, 5,000 credit left in IGST credit account. Now for utilizing credit for CGST liability, you are supposed by law use first IGST credit. 5,000 for CGST liability. So what happened? You will use balance 8,000 from CGST credit. Am I clear to all? So this CGST is being paid, but order of utilization got changed. Come to now SGST. For SGST, now you got 10,000 rupees credit and you got 13,000 rupees liability. You will use SGST credit, no problem. But what happened? In the case which I'm referring to, you're left out with CGST credit of 2,000 rupees because your order of utilization got changed. So what happened? You will pay 3,000 rupees in cash for SGST liability. Even though you're having CGST credit of, and I can't use because CGST and SGST cannot be cross-utilized. So what happened? Having credit in pocket, I will pay in cash. Is it not additional blockage of my working capital? Why this provision got introduced? I know the reason. It got introduced only to create settlement, earlier settlement between center and state. But with this provision, they have created one more additional blockage of additional working capital. Hope I'm clear with the post-amendment provision. Participants? Okay. Having said that, I'm coming to the next provision, sir. And now you can have a look at me, sir. Section 79, recovery of taxes. Let's say I'm having two registration, one in Delhi, one in Haryana. 79 says, if I'm having some liability in Delhi registration, it can be recovered from my Haryana registration. Though we are distinct person, So this is the deeming provision. You are having liability in Delhi, it can be recovered from Haryana. So we are distinct person. If you are creating such provision, then create another provision. If I'm having credit in one registration, this can be transferred to my other registration, Haryana. This should be at par. I'm saying for recovery of taxes, when we are creating deeming fiction, it can be recovered from other distinct person party. Why can't credit be transferred then? But there's no provision of transfer of credit between distinct person. So contrary it is going. So we have to look at the recovery of taxes should be dealt with par provision of transfer of credit. Coming to the next critical provision, sir. There's a concept called pre-deposit for filing appeal. It was there in excise and service tax provision as well. Now section 107 and section 112. When adjudication order is being passed, my first appeal go to the first commissioner appeal, and from commissioner appeal it goes to tribunal. Now what practical problem, sir? There's a provision in GST law that when I'm filing appeal to commissioner appeal, then I have to make a mandatory 10% pre-deposit of my disputed tax, meaning thereby, let's say 100 rupees is the liability, and 20 rupees you admit, that is called admitted tax, and 80 rupees you dispute, then 20 rupees you will deposit along with interest and penalty, and then 10% of 80 rupees you have to compulsorily deposit. Capping is created for 50 crore rupees for the first appellate authority. For second level tribunal, it is 20% of disputed amount. So 20% of 80, totaling together 30% of disputed tax amount. Capping is being created for 100 crore rupees. Now when I compare this capping with pre-GST era, excise and service tax, percentage was only 7.5% plus 2.5%, totaling together 10 crore rupees. Now it is going to 100 crore rupees. And this is going to block the fund in the context of, you have seen, sir, our legal jurisprudence, 85% cases government is losing from tribunal onwards. So what happened? These money getting blocked. And when we are claiming refund, rate of interest would be 6%, as against rate of interest 18% we pay when we delay in making payment of taxes. So this is again creating a blockage. Then corresponding rate of interest, let it be 18% rate of interest at par when I pay on my default payment of GST. So this is the provision, sir. Now coming to the two more provision, and then I will sum up my theme presentation, because I said I'm going to create 10 pointer, though it is being done in GST Amendment Act, but still we have to go back and check what best we can do. Two more provisions, sir. Transitional provision, and there was a retrospective amendment which is kept on hold because it was stated education cess and secondary higher education cess credit is not available in GST regime, Tran 1. Now this is kept on hold. For what reason kept on hold? Again creating a debate in the industry whether credit is available. And coming to my last point, GSTR 9 and 9C. Annual return, we all know, I'm not going to discuss at length the provision of 9 and 9C, but only point which I'm raising, this is the last date for 9 and 9C 30th June 2019. We were waiting this utility to be out, and this utility was not available in the month of December. And this was the context taken in a special order, and then date got extended. I'm standing on 21st of February 2019, 31st March being the last date to avail credit pertaining to 17-18. Still 9 and 9C utility is not available. First part, and even in GSTR 9 and 9C, we got lot of point, maybe 2-3 point importantly. So GSTR 9 is looking for one details that I have to divide, I have to work out my ITC pertaining to input service and capital goods, which I have never captured in my GSTR 3B. So what happened? I'm looking for information, new information, which was never captured in my GSTR 3B. Going to the next point, like in ITC, though it is being stated that 10% is the principal supply, for that only you have to get HSN code. But what is the problem in HSN code, sir? GSTR 9 is looking for HSN of my inward supply, which is supposed to be given by my vendor. But provision-wise, it is being stated that if any supplier having turnover less than 1.5 crore, he need not require to mention HSN code. And 1.5 to 5 crore, 2 digit, and more than 5 crore, if my vendor has not quoted HSN code, then I'm going to go back and check all my inward supply and capture HSN and SSC code, going to create problem. So what 9 and 9C, which is there in a revised form, still it requires lot of correction to make ease of business. Maybe we can summarize those points and let me conclude. So these points which I have raised to you, it is all outcome of our 31st January GST conclave we have done here. Today we are going to have this conclave where we are going to discuss number of point for amendment effective from 1st of February 2019 and GSTR 9 and 9C will summarize those points and will put up to you so that we can get some kind of good solution. So whatever suggestion, whatever theme presentation I made constructive suggestion to take it forward to make GST good and simple tax. With this, let me sum up my theme presentation. Thank you very much.